Okay, and we are live.
All
How's it
right. Hey,
going?
guys. Good. How are you, Tevis?
Good.
Reason why we're late is I was giving Tevis life advice, and that life advice was buy the dip. Not really, but no, that's what we are going to talk about today. Pretty big pullback in some names. If you look at the broad market overall, you'd think, hey, it's pretty flat, boring day. Well, it's actually the opposite. We see some possible sector rotations that we're going to talk about, specifically in software and some financials as well. So a rotation away from everything that's happening the semiconductor. VS pulled back massively. Test systems, Micron, Poet, which I do want to give a little bit of update on Poet when we're talking about buying the dip and or when we'd be interested in what we're doing. And of course, we're going to talk about the trial with Elon Musk, OpenAI, the appeal as well. And then we'll hit your Q&A at the end. Always, if you're asking about things that are we're bringing up during the conversation, we'll try to hit those as we go through. Otherwise, we'll try to hit those in the Q&A period. We'll limit ourselves to about 863, I think, Q&A.
Yeah. Yeah. Nonstop Q&A until we drop.
Yes.
All right. Let's get into it. It feels weird, man, because today was a day off here, and it's not a day off for the markets, and so that's always like getting a little extra treat. But it feels like Sunday, for me at least. But next week is going to be a day off in the US and not a day off for us, which means the markets are closed, which are like the worst days, quite frankly, because I have to work and I don't have the markets to keep me entertained. So trade-offs. But today was fun. I made a couple of trades and happy to talk about them when we
Yeah.
get
Do
there.
you want to talk about more like what's happening in these names, or do you want to talk about like what we're doing about it? I guess maybe let's do that first, and then we'll talk about what we bought and why, and then when we'd become a buyer of some of these dips if we've not bought already. But yeah, overall, like we can look at a lot of different names. Like I think some of the bigger ones, I'll just pull them up just using the simple Google thing here. CoreWeave, I see somebody mentioning I was thinking about writing a cash ticker put. I didn't in CoreWeave, and it's because if we look at Nebius, it is down a lot more, and I'm like, hey, let me buy that juicy dip. I like Nebius better. It is, I think, a little bit less of attractive price in CoreWeave right now, but I wrote a very conservative cash secured put. You can see Iron right there down 4.68, Micron down about 6%. If we look at Air Test Systems, that was probably the biggest one that fell. And it's down 16%. And you know what the news came out on Air?
Oh, there was news on there? No, I didn't. I bought some
Yeah,
air today.
there was no news.
Yeah, exactly.
We have a tendency. I saw somebody ask a question, "What's going on with Air?" When you see a move like this, you're like, "Oh man, there must be like some really terrible news." Well, no. Look, Lightweave is down 15%. If we look at Poet, which is a Silicon Photonics name, I think that it's under attack, but for good reason. Look at my short video. It's down 11%. AOI, I didn't look at it today, but yeah, it's down 10%. So anything related to what has been rallying so incredibly hard, which is Silicon Photonics, it's been dumping. Is this cause for concern, Tevis, for people that are in Silicon Photonics? Is this normal behavior for something that's up that far, or how do you perceive this?
Yeah, I mean, like in the case of Air, it did what, 4 or 5x in the course of,
Five.
yeah, 5x in the course of what, 3 months? Like, I'm sure we can, give it some grace to be down 15% if it wants to. Like, and that's the
Yes.
case with many such names, Micron, Nebius, so SanDisk, like all these names like that are down. They're down after being up so much. Like, you need to allow these companies to have breathing room, and you can't set your expectations to be, all bangers all the time, because then you just get into this euphoria phase where everything gets ridiculously overpriced, and like you're setting yourself up for bigger problems down the line. And also, what I will say is that after these companies have had big moves, the market will sell them off on any on any type of news as a catalyst. So, for example, a lot of the semis and AI names sold off on that Leopold kid filing his 13F, and they're like, "Oh my God, he went short the market, this and that." And it's like, okay, sure, that's whatever the excuse is that we're gonna gaslight ourselves with. But the fact of the matter is that they climbed really high, really quickly, and they just need a breather, and that's okay.
Yeah, absolutely. And I see somebody asking about TRT. That's another one that's in the not so much silicon photonics, but it's in the automated testing equipment along with air. It's down 20, almost 4%. There might be some specific news. I'm not following that one closely. It is a little bit on the radar just because people keep talking about it. But this, like, people are going to take gains, and anytime that there's some space or segment where it seems like everything, whether they're amazing and positioned incredibly well and they're great businesses, or at this point like they're just sketchy and scammy and there's nothing to it other than a name, when everything's flying in a space, traders enter in mass, and traders will take profits. They do. Like, that's what they do. Some are day traders and they'll do that intraday. Some are swing traders and they're like, you know what? I saw, for instance, Jason posted stock market talk. I always get his name wrong. Asian Steve, if you know who I'm talking about. But yeah, he was talking about basically like, hey, this might be a good time to take some profits on Friday. There might be some weakness that's happening, and I mean, he's been killing it this year. So it's hard to be upset too much, like you said, when things are up so much. But like, let me ask this, Tevis. Are beyond air? I guess, like, first, what did you do with air? Did you, if you don't mind sharing, did you write a cash secured put because the premiums are juicy? Did you just buy it? And did you buy anything else that was down a lot today and take advantage of that dip?
Yeah, so I had a bunch of air that was called away, and it left me with a kind of weird, like, everything in my across all my portfolios is like rounded off now. I don't have any more like 24 shares of this and 58 shares of that. It's all like either 100, 200, 300, and I had like 80 something shares of air or whatever, and I was like, all right, I want to. This is like my last little bit. I want to round it up so that I can sell cash secured or covered calls on a covered call on, because the rest of my air, I mean, I only had like 200, 300 shares, but the rest of it got called away, and so I bought the shares in the morning. I should have probably waited, but who cares? At the end of the day, it's such a small position that when we rebound at some point throughout this week, if we rebound, then I'll just write my covered call and be on my merry way. But even down 16%, Roy, like, I looked at the covered call premiums and they're freaking ridiculous. So that was,
Yeah,
yeah.
I was kind of in the same boat where I had 75s that got called away and also 95s on Friday, and the timing on those 95s was great. I was tempted for about a second to just roll the 95s. I'm like, you know what? I wrote the covered calls to generate some profit, but also I was willing to sell and take profit had it blown past that. And so I'm going to stick to my guns and not let emotion dictate what I'm doing with this position. I still have like 38 or 39% of my original position right now. And I didn't buy more yet. I didn't even write cash secured puts. It is on the radar. I think if we do dip below 70, which, I mean, if it has another day like this, it's below 70, I'll be more interested in writing cash secured puts. But I also wrote covered calls, not on my entire position, but I was looking at it when it was trading at like $90 this morning, and it was already down significantly. And I'm like, okay, for a month out, we're looking at $150 strike, and I think I got $400 per contract. And I was like, okay, so you're telling me if we go up significantly, and I'm forced to sell at that point for an insane profit, at that point it almost has become a 10x. You'll pay me $400 for a month time. All right, I didn't do it for all my position because, again, I do want to have some of this position long term. So it was just one contract, to be honest. I'll write more, I think, if there's news, if it rallies up higher, if it's past 100. But I'm going to do so carefully because I don't want to really get these called away. But at 150, I'm good with it. Or is there anything else that was in this space, silicon photonics, automatic tissue equipment, what's happening with as far as like chips and chip design that you were interested in or is on the radar for you that you bought or are considering buying?
So my only other trades today were I sold cash secured puts on Nebius. I made this post earlier this morning, and I said, "Look, I want to figure out if I should sell on Micron or on Nebius. I want to get into Micron, um, and I'll talk about that in a second, like what I'm thinking with regards to Micron. But I ended up writing cash secured puts on Nebius, and here was my actual trade. I pushed it out to July 17th. This is on margin. I just finally got like clear of margin last week, and now I'm like back into the margin. Um, but it's fine. Like a lot of my portfolio is in safer stuff, so I can always clear it when needed. I sold 4 of them at 160 for July 17th. Now the interesting thing here, Roy, is as I'm thinking about doing a covered strangle here. So I'll have 4 cash secured puts on Nebius at 160 and also selling 4 covered calls on Nebius for the same strike or for the same expiry date for 330 strike price. And you can actually make like, over 8K for 64K collateral, which for 60 days, which is like what, like it's over 10%, almost 15% return, something like that, off the back of this. And then like worst case scenario, this thing blows past 330 on July 17th and it's, Nebius at 400 and you miss out on a whole bunch of gains. Well, I mean, like you're forced to take profits at 330. Like I don't think you're going to be too sad about that. But if this does go, below 160s, then you would be committing yourself to buying more shares. Any thoughts on like I wrote the cash secured puts and I was like, oh, this is compelling in isolation. It was about like a 9%, return on the collateral. And I said, why don't I just do a covered strangle and then even maximize more because I'm setting the top and the bottom threshold.
Yeah, I mean, I don't hate that. And of course, if somebody's listening and they're trying to figure it out and mimic it, like make sure you understand what that means. Spend some time studying options and playing with them in small increments and bits before to make sure that you're ready for them. GD0721 says it's pure gambling. If NVIDIA gives a positive guidance, Nebius could pop 25%. I actually really disagree. We would have to see like a major partnership or something. We talked about it Friday, and we also talked about CoreWeave as well, and a little bit Iran. And Nebius, it got ahead of itself as far as a stock. We said that on Friday. We're not saying that now because it's down, 10% or whatever. But the reality is, stocks will do that. The market always overreacts. It overreacted on the downside when it was below $70 briefly a share for Nebius. That was stupid. That's easy money. And on the upside too, like I said, I was not going to roll things out if it was above $200 for Nebius, but I was traveling last week, so I went ahead and rolled it out. I think about like 155s, so I didn't feel any of the fall from this. I'm just like, all right, this is awesome. And so I have no stocks that I can write a call option on right now for Nebius, but I did write just 2. It was just a couple of cash secured puts on Nebius. Very conservatively. I still have a lot of money left over from Air and a couple others that I can deploy into the market. And I ended up buying a couple other little things too, but also leaving some cash there. But on the cash secured puts, it was so conservative on Nebius. I was just like, okay, let me do 140. I should have written them more aggressively at 155 where my covered call is, honestly, more premium, and I'm not unhappy with that price. But with this kind of dip, and after we've run so ridiculously hard in some of these names, I'm thinking that there's at least a chance that we might get another, like it might take a week or two just for the dust to settle before things start moving up to the upside. I don't think we're going to get a lot more days like this in a row. There might be like 1 or 2, but usually when it's this aggressive of a sell-off, especially in names that nothing really has changed fundamentally, people want to buy that dip at some point. And I think people might be stepping in a day or two. But that said, I don't think we're going back up to the all-time highs on a lot of these names necessarily in like 3 days. I think it might take a few weeks, maybe even a month or 2. If so, I'll be buying the dip on some of these. But yeah, writing a cash secured put very conservatively for just basically it's better than interest. is the way I thought about it. And if Nebius falls to 140, I will be extremely happy to be owning it there. And yes, that's like almost double my previous price in buying Nebius. Man, it's a great company and high quality, and I'd love to have that. So, and beyond this, just to kind of share what I did, I ended up buying just 100 shares of SoFi. I figured like it's been a while since I bought SoFi. Long term, I think it's a great company. I don't know necessarily that it's going to go anywhere until the fourth quarter, but I try not to time those things necessarily. So if it's dead money for a couple of quarters, I'm okay with that. I don't think I'm going to regret owning SoFi at this price level in 5 years. And it's 100 shares. It's not like the biggest deal in the world. I bought a good chunk of VG. It dipped briefly to its like basically break even. It was like right around 13.90 or something like that. And I'm like, okay, I'd like to buy more. I'd love if VG had just tanked after earnings and went down. The guidance was so ridiculously good. I also still like them as a hedge just in case things don't work out well with the peace agreement. If it does, I think that VG might pull back some. We might see a 10% or 12% down day or something like that. If it goes back to single digits, which was already at, is at $9 and some change before all is what has changed because of Hormuz, I will probably make that 15% of my portfolio. So I wouldn't mind if that happens. That's basically a double of my VG position. And then I think that's all I did. I might have done. I sold a couple of little positions and I added a little bit here and there. Or I bought a little bit of Nubank. It wasn't even 100 shares, but it's kind of like you. I had I like the nice round number, and for some reason I had like 15 shares of Nubank. I'm like, let me just round that out. So
yeah. I don't hate that. The VG is interesting. I mean, I own VG. I'm just waiting for my covered calls to expire by 2 weeks from now or a week from now. When is the 29th? 2 weeks from now. And SoFi, I'm not really looking to add more, quite frankly. I think just fully built out. I'm going to write more aggressively on SoFi though, because I haven't been touching it at all. And I'm like, well, if I lost some of my SoFi shares, at $22 or $23, like where I'm writing, like, would I be sad about it? In this market, probably not. I mean, I'm not.
Are you looking
position?
Are you looking a month out then? Because there's no premium this in the weeklies.
Yeah. A month or 6 weeks out, something like that.
Yeah. I wrote cash liquor puts on Robinhood last week. This week I just like let me buy some SoFi. And all with the cash liquor puts, I wanted to have some cash just in case. And I was like, I'll write on Nebius. I was hoping to write on CoreWeave. CoreWeave did not dip nearly as much as the other names, and I know I talked about that Friday, but like let me take advantage of some of this. And if I can get into Nebius at a lower position, then some of my shares got called away, I'll be pretty happy.
Yeah. So one thing that is interesting for me, and also to that comment around NVIDIA earnings, like, yeah, they have earnings, but NVIDIA has triple beat earnings in previous quarters, and we've sold off on that. Like the expectations are so incredibly stacked on NVIDIA that I don't think there's anything they can say on the call that they haven't already said that will move stocks when it hasn't previously. Jensen has said, $1 trillion of backlog, and this is going to be a game changer. Like he's said it all, and basically, like we haven't really seen all these other names moving. Now, if they announce a deal or like Nvidia takes a bigger stake or something like that, there's some news that's directly related to Nebius, and yeah, absolutely. But for their earnings specifically, like I think Nvidia is going to do fine. I think they're going to continue their compounding, but I don't think there's going to be anything that will materially move Nebius like 25%, like you said. It's just not going to happen. Micron.
That's what I said last time, and I strongly disagree this time. And I probably should make a video as far as why.
Yeah.
But it's very, very interesting. Let me pull up.
Also, guys, like don't ask the same question twice. I've already bookmarked 15 questions. We'll get to them.
Well,
yeah, because it's just confusing. You asked multiple times.
So there's some significant differences in the previous earnings. So last quarter, when Nebius, not Nebius, I don't know why I keep saying that. Let me put this here. Oops. Open image and new tab. It won't let me for some reason. Okay, whatever. I don't want to show my email, and for some reason I can't get that newsletter. There's a pretty cool newsletter that Robinhood's doing that's interesting. So several things have changed from last quarter. And it's not necessarily like NVIDIA has changed, that it's gotten better or stronger. Like, it's already ridiculously strong. It was already ridiculously undervalued as well. Two things primarily. One is, last time when we were entering earnings, there was this dual narrative out there, which I looked at this, and stocks move short term on narratives. They just do. And in this case, NVIDIA could not win. They were in a no-win position. One narrative said AI is going to eat the entire world, and as a result, everything except for maybe some AI names is going to go to zero. And who's going to be NVIDIA's customers if AI eats the world? Which is like the dumbest argument ever, especially as it related to NVIDIA. But it was there. People believed it. They found it credible. And on the other side, you also had that, okay, all this AI CapEx stuff is just going to dump off a cliff, and it's going to go like in 2 years to almost nothing. Like, this is just a very cyclical name that is benefiting from a super cycle, but that dump is coming, and it's coming soon. And that was a stronger of the two narratives. So last time, if NVIDIA beat substantially and just crushed it, they have really good earnings, by the way, that would have fed one narrative, and the stock probably wouldn't have moved too much. Or if they had come in and they'd missed, of course, the stock would be down because it would miss anyway, but it also would have fed the other narrative of the CapEx cycle drying up more rapidly than anticipated. And so the best case scenario was NVIDIA would just be range bound. Now, what's changed since then is several things. So let me just share the entire screen. Well, it doesn't let me for some reason. Okay, well, I'll share this window and I'll share another one. One thing that's like really interesting, this came out and it was originally sourced from Bloomberg, but is on Sherwood Media, the Robinhood thing. NVIDIA used to be an incredibly high beta name because it's been range bound so long, especially compared to SMH. It's actually a low beta stock within that peer group. So in essence, what this really shows, Tevis, the others that are in the SMH for the most part were part of this narrative that this CapEx cycle is going to dry up really, really fast, and as a result, these are just super cyclical. Well, no, all the other names, not all the other names, but a ton of other names have already run. And so it's clear that the market, ever since I think the Strait of Hormuz kind of took attention off of this, and there's been more time to just kind of digest what this is, this narrative has no longer persisted. And as a result, NVIDIA is free to run. Now, beyond that, let me throw this up here. And you can see the stock price action. So year to date, I mean, we set a new all-time high. We were for the longest point. Let me put out a year. Look at this. From really, back here, August 4th, all the way up to mid-April. You can even include like this right here in May, where we were not up above 200. We were range bound for a really long time. Now, that doesn't always mean a stock is going to go up and to the right immediately. But this consolidation phase, of course, made NVIDIA even more attractive. But when you have a technical breakout, and I'm not going to draw the lines or anything, I'm not that kind of guy. Nothing's wrong with that, but it almost sounds like I'm disparaging of that. But this is incredibly bullish. And so going into earnings, NVIDIA, of course, it was down a little bit today, but relative to its peers, again, lower beta. It seems like the market is at the point where it's willing to give the premium, even when we had the news last week of initially, hey, China is open game for NVIDIA. This is great. And then actually, no, it didn't happen. Didn't fall back to like below 200 as I expected. So it appears to me that the conditions for NVIDIA are substantially different. Now, I'm not saying NVIDIA to 300 like this month, but over the next 2 months, I really think this thing could go to 300. If you look at it from the multiple standpoint, what they've executed on, what Jensen Huang has said as far as that $1 trillion number as well, over 2 years of revenue. We've seen the qualitative question as far as the TPUs being really good for one aspect of AI, but there is no second best. Like there are second best, but there is no peer that's anywhere near as close as NVIDIA. The qualitative gap seems like it's wider than ever. And so I think that they're actually positioned to possibly surprise a lot of people that think NVIDIA is just a silly stablecoin to go high to the upside this week. So I'm being very careful with my covered calls on NVIDIA. I did write some, but it was $300 level, not much premiums. and I'm okay if I lose some shares at 300, but I think it might take a couple months.
300 on NVIDIA is where you wrote?
Yes.
Yeah, so basically that's what he's saying is that NVIDIA can go to 300 and this earnings could surprise people to the upside. One thing I want to bring up, not related to what Roy just said, this is interesting. Use a Google Doc so people can see your questions and you can combo questions if similar. So we could try this. The problem is we don't have a producer backstage to, copy and paste the questions into the doc. And I'm just like StreamYard has a bookmark feature, so I can like one-click save questions. I could try to open up a Google Doc so that anybody with the link can comment, but that might devolve pretty quickly. But we can try it, and then if you guys behave, then we can use it in the future. But we'll try it. I'll also have the questions from the chat here as well, and then we can go from there. Yeah, same thing with Slido. I mean, I'm not concerned about. It's just, is there going to be a filtration? Anyway, it doesn't matter. Okay.
I see we have some volunteers to be a producer. So.
Yeah, Renee wants to be a producer. Yeah, Tevis, highly recommend you do not do that.
Matthew Johnson says you have a lot of faith in the chat. If Matthew Johnson was the producer, we'd have just, he asks great questions. He really does. But we'd have all just Matthew Johnson questions. So that's no good.
Yeah, I appreciate you guys being so honest with your answers. So maybe we won't do that, and I'll just keep going as I've been doing it. What was I going to say? So, okay. Yeah, go for it.
Well, you want to push back at all on the NVIDIA thesis, or?
I think 300 for NVIDIA definitely sounds out there. If I saw 300 on NVIDIA, would I be shocked? I wouldn't really be shocked. What would it be from a market cap perspective? Would it be like 7.5 trillion, 8 trillion?
Let's see.
So
yeah, it'd be over 6.5, I think. So
really?
Close to 6.4, is it? I'm not gonna do the math right now. Yeah.
Anyway, 6-7 trillion, let's call it. That's a big company. But here's where I hope you're right, because if NVIDIA goes to 300, all of these other companies in that ecosystem will absolutely pump as well.
Yes. I think, as far as like absolutely pump, I think the NVIDIA will outperform most over this time, just because it's a catch up. Like we looked at the long consolidation. If you look at the multiples, if you look at the revenue that Jensen has forecasted, if you look at the estimates from what analysts have put up there, they're actually pretty conservative, and it's actually a pretty tight range as well. And if Jensen is anywhere close to right, and I don't think he's factoring in China at all, it's going to be not necessarily a blowout quarter this year, but this quarter, but this whole year, it's going to be substantially higher than is expected. So it's even cheaper than it looks, and it does look pretty cheap, even close to an all-time high. People just sleep on names like this that have run up so hard, and it's why it's a low beta stock right now. People are like, hey, it's just a stable coin. But you look at what they're actually doing, producing, how instrumental they still are in this AI arms race. Man, I'm telling you, I would be completely fine if I'm wrong here and we go back below 200. It's a little bit frustrating, but I have just one leap on NVIDIA for $350, the end of 2028, and I would like to have a lot more.
You bought a leap on NVIDIA for $350?
Yeah, I'm up about like 50% on it. So,
brother, who is the degen here? All right, we got to start a poll. Who is the degen here, Tevis or Roy? Because, god damn, that sounds crazy to me. You bought it for $350, dude. It's like $150 out.
Yeah, you know what the time frame is, though. I told you that.
I mean,
it's 2.5 years.
Still, like in the last 3 months, you were the one that was calling NVIDIA a stablecoin, and you're like, you know what? $150 in 3 years. I mean,
It's changed. Yeah, it's no longer, the narrative has faded, and these stocks trade on narratives. They also over the long term trade on fundamentals, and both are in the direction of Nvidia. So yeah, it's December 15th, 2028, $350 strike. I'm up 44.75%. So despite the down day, like I wouldn't mind owning more.
that's a top indicator. Oh boy, I feel like we should
I didn't
flip.
buy it recently. Like I bought it when it was like 170 or something like that. So no, I've already. Neil says he wants that PayPal money back ASAP. Already got it back and more plus some. I bought. I think everything that I bought. Well, now even Nvidia. Nvidia I bought just a little bit of, but I bought VG, which is before the Strait of Hormuz stuff. Crazy. I bought Air Test Systems at like $25 or something like that. It's done well. I bought Nebius, and I'm forgetting one, but yeah, everything went just incredibly well. So yeah,
Yes.
I mean, you really think 350 for Nvidia, the end of not 2026 this year, not 2027, but 2028 is too high?
No, it's something that I would probably do. I'm just shocked that you're doing it. You're supposed to be the adult in the room, bro.
I only get leaps like this when I think that there is a huge upside and a fundamentally undervalued position where I've already built out my shares or most of my shares. So, I wouldn't have like a large amount of leaps on it necessarily, but could I do 5 or 6 leaps for Nvidia? Maybe, yeah. Not all at 200, but I would add at 200.
Man, I love our chat. It kills me every time. All right, let me talk to you about my Micron. I've been trying to bring this up for the last 30 minutes now, Ron. You're talking to me about NVIDIA and your leaps being $150 out, trying to actually educate users here.
All right, Micron. It's down a little bit. Where are you wanting to enter, and why are you wanting to enter?
The premiums are so freaking good that I'm like, okay, I could sell my 100 shares of Meta that I bought on stream at 590, and I can put those 100 shares of Meta into Micron because I think memory is going to continue to do well. I think Micron might pull back another day, maybe 2 days, whatever. But even in the low 600s or high 500s, if it gets there, I don't know. And then I could just use it to run the wheel and actually generate way more premium than I would with Meta, because Meta premiums are so non-existent. They're just so slow for my tastes. And Micron has some nice premiums. I was checking them this morning, and I think fundamentally the stock is going to do better in a risk-on environment, and the premiums are going to print more. But I'm reluctant to give up the Meta because I think Meta is going to also do fine, and it's been my piggy bank position. So it's just like, okay, what was the plan back in December? Back in December, I said, hey, I want to reposition into piggy bank type of stock. So I bought Amazon, I bought, Meta, and generally my portfolio obviously fell in January and February, but not as much as if I had gone full degen. And I've been saying now for months that I think the second half of the year is going to be more risk on. And I think memory is going to continue to do well. I was looking at Micron's numbers over the weekend, and it's just some staggering results there. And I think that, how exposed I want to be to this AI trade is like one of the considerations. If in fact it continues the way that I think it's going to continue, I think Micron is going to do fine. It's going to hit $1 trillion valuation and then some. And ultimately, I could be printing more throughout that entire process. So that's the thought process. Now, the scary part is you're buying this thing close to the top, and we don't necessarily know that we're going to be in a risk-off type of environment, or sorry, risk-on type of environment. And, we don't know if we're due for a pullback, or this is going to continue further, or if this is just a blip and it's, the demand story is going to continue to play out as it has been. So that's like my whole thing. Now, because I want to run the wheel, it's like I either the minimum bet size is 100 shares. 100 shares of Micron is like 65K, right? So I can't just be like, oh, let me, get some exposure with like 10K or 15K or something. Like it's either 65 or 130 or nothing. So I don't know. What do you think?
I it sounds like you want to own Micron mostly because of the premiums more so than actually being bullish on the position. And I think usually that's a mistake, even if it's the right idea. Like if Micron goes to 1,000, which it definitely could. This I think it might have further down to go. You've not written a cash secured put yet.
Mm-hmm.
What level? I guess what level are you eyeing Micron for, like a potential entry for through a cash secured put, like 500, or
No,
are you
I was
looking at
looking
like?
at I was looking at 600.
Yeah, I mean, I'm more conservative usually, except apparently with NVIDIA, which everybody is doubting. But yeah, I would personally wait for 500, or wait for a little bit more pullback, see if you get it. Since you like one other thing too, it's okay like if you're uncertain on something, and this is like to you, Tevis, but also like to everybody. If you're like, I don't know if I want to get in here or not, give yourself more time, and the market will give you that answer. Now, sometimes the answer is, boom, it went up 20%, and you're like, yeah, I missed it. But sometimes it's like, man, it fell further than you expected, or it fell to that range where you're really comfortable and happy, and then it made it obvious and clear. And I tend to wait unless I have large sums of cash, which was part of the reason why I bought, what I did today. VG was a different thing. I was like, I got to add to this name. But like with SoFi and adding a little bit to Nubank, which wasn't a big order, and a little bit others as well, writing the cash secured puts, I have more cash than I'd like in my portfolio. But if that's not the situation you're in, and it's not because you're on margin, be more conservative. Give yourself some time. Like this, if we continue to get some weakness here, you could see Micron much more cheap than you actually expect, at a very attractive level. Like it wasn't that long ago when Micron was trading at like barely above 300, 321. I don't think we're going to fall back to there. But yeah. And then you have a couple of names on your radar. Like I think you're doing the right thing on Meta, as far as like you would love to get some premiums from option, but you're just bullish on the company, and so you're holding the shares, and there's nothing wrong with that. It's like SoFi right now. If you're into SoFi because you like selling options, it's frankly the wrong name. But if you're in SoFi because you're like, hey, over the next 5 years, this is going to be a lot higher, that's great. Nubank is one of those for me. Not really boring, but it's boring for a lot of people. They just compound. They grow really well. The stock, it's trading quite cheaply. But if you're looking at that and you're like, oh man, look at these cover call premiums, they're not there. It's a terrible idea. And so you have to kind of know like what you're buying and why you're buying it. So if this is purely about premiums, I would be more conservative because you're already on margin. And if it's not, even if it's not, probably give yourself a little bit more time and grace.
That's good advice. I'll ask you this question, but first of all, thank you, JJ Forever, for the $5. Speaking of high flyers, I'm absolutely licking my chops for Nebius to come back sub 150, backing up the truck. I mean, yeah, it was sub 150 for a very, very long time, and people were not treating it the way that they're treating it now. But I am with you. I mean, my 160 puts that I sold for July, I think my adjusted cost basis for those is like 145. So I'd be happily buying at 145 in July. Obviously, Nebius is something going to come out and the stock could trade for like $70 in July, and I could be eating those words, but I hear you. So let me go back to Micron, Roy. What would be the buy zone for you for Micron? Because I'm also interested in hearing your thought process here. And is that more of a technical perspective? Is that more on an evaluation basis? Like, what are you thinking?
So valuation, it's hard to value, just because there is still going to be cyclicality with Micron. But like if you're just looking purely at valuation, it's not a bad valuation right here. It's not. But yeah, I think from a technical perspective, I would look for an entry probably around $500, and it could easily get there. April 30th, it was 517. Like I'm not saying like wait for exactly $500, and oftentimes those psychological levels could prove to be resistance. You'll miss it by a couple bucks, and you'll miss out on a lot of gains. But that said, I don't know that I'd have to think about it, like whether I'd actually get in a Micron or not. I think that they're positioned well. They're going to continue to compound for a while. They're not unattractive at all in terms of valuation. But yeah, I'd be conservative on that. I'd rather be in Nebius. I really rather would.
Well, yeah,
man.
Nebius
But
is
I mean, it's
40%
trading. Yeah,
my portfolio, you know.
yeah. I don't have that problem. Also, I don't have that problem with SoFi. Like you're big in those two names.
Yeah. Meta's my third largest, man. It's like 13% of my portfolio now, 12.5% of my portfolio.
Yeah.
So I need to figure out like, well, because Amazon got called away, right? And all I have for Amazon now are the spreads on Amazon. So I'm like, all right, like what do I want to do here? Because Meta's just been choppy all, like, you know, since I've been in it, you know, for the last 4 months, 5 months. And one of the big reasons why I was in Meta and Amazon, obviously, because I think they're both undervalued, they're both going to continue to do fine, and they're both like investments that I would take on. But also, again, to my earlier point, like they're both piggy bank stocks for me. So it's like if it was choppy, like that's fine, because in my mind, it's almost like sitting in cash, right? Comparatively to the high beta names that I'm usually in, is what I'm saying. So now I'm like, all right, well, is the market going to turn around? Has it turned around? You know, what does that look like? Do I want to get into more risk on? But I hear you on the margin side of the equation, and it's a good counterbalance too to have, you know, these Mag 7 companies in your portfolio, because it balances out the volatility.
Yeah. Especially when they're low beta like NVIDIA, apparently. I don't. I want to hit two questions in the comments that are kind of related to what we're discussing. One is from PG Jensen 1001. Nebius has tons of debt. Why would you prefer that? They don't. Their model is. He's thinking probably CoreWeave.
CoreWeave has $35 billion of debt. Nebius has what, like $8 billion?
Yeah, they have very little debt. Their model is dilution, not debt. And CoreWeave's is debt, not dilution. Now, there's more difference between the two than that, but yeah, we've talked about it in the past. But I think it's the highest quality name because of the neocloud that they're building, and the market seems to agree right now. When I was buying it heavy, when Tevis was buying it heavy, the market didn't agree. It can always change its mind. I don't think any of the three big ones that are in people's minds, CoreWeave, Nebius, and IREN, are bad. But I would rank it Nebius, then CoreWeave, then IREN personally. Yeah, the ClickHouse is a good comment. Like it's less relevant now that it's not like $40 a share or something like that. At $200, it's like, it's a small part of it. But the other is some people were asking about the DRAM ETF, which I really like the question here. If people are not familiar with this shows the breakdown on this ETF. And so you can see here, it's kind of interesting because I didn't realize that Micron was such a small position in this. So if you're really bullish on Micron, this would probably not be that attractive. But at the very top, you can see Hynix, and then you can see Samsung as well, and then some smaller names. I'm sure you've heard of SanDisk before, and Seagate, and Western Digital. I'm just kidding. But, I'm actually not familiar with Winbond or Nanya. But regardless, why or would you ever be interested in something like this versus a Micron? Or are you just like, hey, the premiums are going to be much better in a non-ETF, and so you're going to do something like that? Because you can see these are not bad gains, up 45% over the last month, 84.1% year to date. I suppose that's pretty okay.
Yeah, I mean, I wouldn't be against something like that. I would happily buy an ETF like SOXL or what's the other one, SMH, or this one. I'm not against it. I just historically, I don't, I haven't bought a lot of ETF. Honestly, man, I think at some point I'm just going to start completely changing up the strategy where the majority of the portfolio is going to go into ETFs. and then I'm only going to play with a much smaller amount, because I don't know. I feel like at some point it becomes unnecessary to take on so much risk, especially as you're getting closer to like, okay, these are sort of the numbers that I want to hit from the market. I'm not saying I'm there yet, but I'm saying at some point, like that switch is gonna happen where I'm gonna be help maybe even more degen, but like with a much smaller amount.
Yeah, oh, it makes sense. And you're going to do you. You'll figure out a way to degen it anyway. So I like that.
Yeah, like the TJ taught me, running the wheel, which is like the safest option strategy, and I somehow found a way to make it degenerate AF. But so I'll find a way. Don't worry. Yeah, Jerry, I'm getting old, bro. Like, what do you want from me? But not yet. We'll see.
Yeah, and ETF buying is not a bad thing. Like, I think that if you're bullish, like on a very specific name and company, you know it well, you're better off usually investing in that company versus an ETF. But if you're like, hey, I don't have time, I'm too busy making money with my career, too busy with family, like, but you're like, hey, what's happening in the space I like, I just don't know how to do figure out the quality in that. Or you're like me, like with cybersecurity, and you're like, I want exposure, but I don't really know how to basically determine what's actually going to be the best of the best or not. Now I have some idea and indication, but that might be a good time to get an ETF. But it's individual stocks more where I'm at too. There is a time for that. I mean, like beyond like I do own a chunk that are ETF like SPY and VU, that sort of thing. Lots of good questions in the Q&A. Before we go there, one more topic that we have to cover, and that is Elon Musk, Openai, and the lawsuit. So today the ruling came out. I believe deliberation was just 2 or 3 hours, and the jury, they ruled that the statute of limitations had been passed. And as a result, like California has a law that requires this within a very short period of time. I believe it's either 2 or 3 years. I'd have to reread that. And Elon Musk appealed almost instantly to the Ninth Circuit Court. Was very unhappy, of course, with the ruling. Was this surprising to you, Tevis? And what do you think is going to be the outcome? Any takeaways from this?
I'm not sure what the outcome will be. The fact that he appealed it is the least surprising bit to me. I think everybody knew that he was going to do that. I think OpenAI needs this to go away before the IPO, because like they need a clean slate. They don't want extra overhang. So yeah, I didn't read the details of the ruling. Obviously, he's blaming like activist judges and all this, and like I get it. I am not discounting the fact that there could be some bias there, but yeah, I don't know where we go from here. I don't know what the overhang is going to be on SpaceX, if any, versus on OpenAI, if and when they go public. Like if this pushes back their dates. Although we now have like secondary markets on Hyperliquid for all of these names, by the way.
Yeah.
So you can see them trading in real time.
I've been thinking about getting into Hyperliquid. I don't think it's too late necessarily, but it's exciting what's happening. But I do see some questions on tokenization too that we're going to hit that's related to that. So yeah, this is his pinned comment regarding this. Regarding the OpenAI case, the judge and jury never actually ruled on the merits of the case, just on a calendar technicality. There is no question to anyone following the case in detail that Altman and Brockman did in fact enrich themselves by stealing a charity. The only question is when they did it. I will be filing an appeal with the Ninth Circuit because creating a precedent to loot charities is incredibly destructive and charitable. Giving in America, OpenAI was founded to benefit all of humanity. We'll see. I'm not holding my breath that the Ninth Circuit especially ends up ruling in favor of Musk. And of course, it can be appealed should the Supreme Court take it all the way up to that level. But yeah, it's I think he filed in 2024. So the question is whether it was in that time zone or not when they had made this pivot. And yeah, as far as the nature of the case, whether it has merit or not, I'm not a lawyer. So I know when something is beyond me. My undergrad was in justice. I was planning to be a lawyer at one point, but I didn't go that direction. That's not my expertise at all. So as far as I did want to ask you, and you mentioned this already, like any overhang on SpaceX or on Tesla. I don't think so. I think that like this is one of those cases where A, it doesn't really impact them anyway, and
It does.
B,
It does. I mean, look, I think the Tesla impact is negligible, but the SpaceX impact, I mean, he has Grok. There's comparables in the AI space as well. So obviously, for as long as he sort of keeps this like political feud, like it will have impacts from a sentiment perspective at the very least to SpaceX because they own XAI. Um, so I mean, I don't know the degree to which that will impact, but I would imagine it's higher than Tesla's impact.
yeah, we'll have to see it. And these things can take a while to play out, and again, there can be another appeal beyond this as well. So, are you ready for Q&A?
Yeah, I am ready for Q&A. Shall we go to our Google Doc?
Did you? No, you didn't do it in
No, I
Google
didn't
Docs.
do that. All right, let me do Q&A here, and let's get into it. If you guys have not already subscribed to the channel, if you're new here, let me know. And if it's Matthew Johnson saying he's new, I'm gonna kick him out. But yeah, if you are new, subscribe. This is a recurring show on Mondays at 6 p.m. Like it, share it out. Thomas, you're not new. Bro, I know all of your guys' handles like by heart at this point. It's only like the same 5 guys that just respond in chat. All right, let's go into the questions. I bought 20K worth of SoFi today. Thoughts? Congratulations. I don't know what to say. I think you're going to do fine over the long term.
Yeah, if it's a long-term mindset, yeah, I think you're fine.
Is BKSY on any of your radars? I don't know what that is.
Black Sky. It was, I think it was originally a SPAC. I know that Palantir was involved with them, that they were using Palantir Tech. I just pulled it up. It's up quite a bit, which is interesting. I don't really know why I've not been tracking it for a while. So it's not really on my radar, I'd say. I am aware of what they do, but no idea why they're up so much. It may be related to space simply because they are satellite telemetry, but yeah, don't know much about them. Not kept up since 2022.
Welcome to the Bank Holders Club. Yeah.
Yeah.
Thank you. Appreciate the support. Not like these goofballs that say they're new, and I recognize all of them. But also thank you for being here. I haven't seen your username before, so I'm gonna assume you are actually new. All right, let's.
By the way, before we go to the next question, I did a poll. This is just on my channel, but from viewers, if they thought not Nebius, okay, did it again. NVIDIA would be past 350 or 350 plus by the end of 2028. 73% say yes. So maybe not so degen, Tevis, or maybe I just have a channel full of degens.
How about you buy more leaps? How about that?
Come down a little bit more, and I will. There's a couple of names that are like that, and there's one name that I'd love to buy if it's up more, and that's Poet. Not buy, but short.
Oh, Freddie is the one guy who watches my Nebius videos. Bro, I should show you my my YouTube dashboard. It's like every video is like 15K, 16K, 20K, 19K. And then every other video, which is a Nebius one, is like 3K, 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 4K, 3K, 4K. And I'm like, oh man, why do I keep making these? Ironically, it's the only freaking stock I have that's going up. Like these people love misery. These viewers. It's probably a lesson in there somewhere. Andrew asks, would you buy CoreWeave here at $100 or Nebius at $200 for this year only? Ooh, good question.
CoreWeave.
Really?
Yeah. For this year only, yeah. I think Nebius is ahead of itself. I think both are going to do well. I'd rather bet on CoreWeave, especially with their close partnership with NVIDIA and the earnings being right around the corner.
I think Nebius still has more room to run. I actually need to make my new price prediction video at some point, probably this week sometime.
Yeah, if it was Nebius at 170, I'd probably say 170. Like it's close. It's not an easy decision, but
yeah. Setting up for another Taco Tuesday tomorrow. I think we are. Uh, didn't we get good news towards the end of the day on Iran?
If we did, I did not see that.
Also, I am gonna be giving out some memberships. So really, really good to see some new people joining. I do think we got Iran positive news towards the end of the day. They said they're like, hey, we want to end it or something to that effect. I'm sure the chat will let me know.
Let me pull
Yeah,
Evan.
no
and
war
see-
tweet came out. Trump said no attacks for now. Oh yeah, he said there was an attack planned for tomorrow that he's like pushing out or canceling. So it did, like, you see many names ticked up towards the last couple of minutes of the day on the back of that. So we'll see. We'll see. I think this is a necessary dip, but I also think it's gonna be short lived. I don't think it's like something that's structural. Yeah, we're deferring our attack tomorrow because Qatar said they're negotiating. Thank you, Thomas. Yeah. Okay. Yeah, exactly. He had to save semis. Let's move on. Thoughts on the Kobayashi letter post about how the SEC is leaning towards an innovation exemption for allowing the trading of tokenized securities. Let me throw that up.
Yeah, I saw that in the comments, and yeah, that came out when I was driving, so I hadn't seen it until now. I'll read it out. Breaking: the SEC is set to release a so-called innovation exemption for tokenized stocks, which will pave the path for trading digital versions of securities per Bloomberg. Details include, in a surprise move, the SEC is leaning towards allowing the trading of tokenized assets. These, I don't see why that's surprised, but okay. These tokenized assets would be tradable on decentralized crypto platforms. The move could reshape the landscape of American stock market. This would be one of US's biggest shift in crypto infrastructure yet. Tokenized assets are rapidly expanding. I mean, does it? Would you be? Are you surprised? Because I'm like, I thought this was almost a given.
I am not surprised that we're moving in this direction at all. I think I'm a little surprised that we're getting it so fast. But again, this administration has historically been incredibly crypto friendly, and we also got news earlier today as well, Roy, that the um, the Senate is expected to hold a floor vote on the Clarity Act within 30 days. So very crypto friendly, moving very quickly with purpose. And it seems as though they're serious about this. Of course, tokenization is one of the catalysts that we have for Ethereum and BMNR ultimately. So it's interesting. I wonder what this is going to do to liquidity, though, for the actual equities market. Because if you have now a secondary market that's tokenized versions of some of these equities, I would imagine that would take out some of the volume in the existing market, but maybe I'm mistaken in that. Like if there was like another, tokenized version of Tesla, well, all of a sudden, at least some people would not trade it on the New York Stock Exchange. They would go and trade it on Hyperliquid or wherever this is going to happen on some blockchain. And it would be good for the blockchain, but it wouldn't be necessarily good for the, let's say, options chains or just in general, the liquidity. Maybe the spreads are going to widen. Am I wrong in that?
Um, I don't know. Like I don't think so. Like we already kind of have tokenization anyway. Like you have it through Hype, you have it through Coinbase is doing it. You have it some through Robinhood as well. You can look on Artemis and see all the real world assets that are being tokenized, but also the stocks and the trading volume. And yes, it's at all time high, but it's off of a very small base. And if you compare it to the volume of what is trading as far as tokenized stocks versus what's the traditional trading, it's so tiny. I don't think that ever necessarily or like anytime soon goes mainstream. And if it does, it probably means there's a lot more participants. I don't see too much of a downside with the tokenize as long as it is backed one for one. And I guess the one area that I do have a little bit of concern as it relates to stock borrowing, because we ran into issues, and a lot of pushback from the SEC and also retail on like naked shorting and that sort of thing, keeping track of float size, and also not necessarily. I don't know, like we just have to be a little bit careful with it. I do like that the SEC, like if they're getting involved in this, they'll make that regulatory clarity very apparent, which is needed for this. What's interesting with this, like this isn't the only approach that is related to what's happening with the blockchain and stocks. I will be doing content on Figure Technologies, and there will be a major video coming out later this week, probably closer to the weekend, if not the weekend. And I've written a lot of articles. One of the things that Figure has done, which is really interesting, they're mostly like they built a lending platform using crypto, not like lending against crypto, like you can do that, but basically taking traditional finance, using blockchain to make it a lot cheaper and a lot faster as well. And it's really exciting what they're doing. One of the plays that I'm very skeptical on whether it's going to work or not is called the Open Network, the on-chain private equity network. And what they're doing there is they're actually listing the stocks directly on blockchain instead of tokenizing it. They're not tokenized versions. And they've actually done some of this with their own stock as well. With everything that they've had to do with Figure, they've had to be the first mover, just because a lot of people are like, well, that's weird. Why would I ever do this? And initially when Figure did this, they ended up, of course, reducing their float size that's trading on traditional markets, and then they also had this on blockchain, and there was a disconnect between the prices. That's stabilized. I've not looked at it recently, and I probably should, but there's very little difference there. The biggest impact, there's a few of them, but is that you actually own the vast majority, if your shares are borrowed, of that actual interest. Like if that's the thing that you're interested in, 24/7 trading, obviously, like all the benefits of tokenization, just removing the tokenization aspect, it's a real share there that's available on blockchain, that you have direct ownership of. So I actually like that approach better, although I'm very skeptical that it's going to work. There has been a little bit of movement towards that, but I think what the SEC is doing is just fine. It's bullish, like people might wonder, like with Robinhood, like is this going to be very bearish because there's going to be a lot more entries? I think that they'll be very small. Like I did pull up, and I found it interesting, like that Coinbase is advertising like stock trading and stuff. It'll be interesting to see how rapidly that's adopted. I don't see it necessarily being a meaningful driver away from even traditional brokerages that are not doing anything with blockchain or not doing much, like Schwab.
Yes. People in the chat were also saying that this will also allow weekend markets, and eventually, the DTCC is planning to have this globalized for all stocks. So it's a direction that the market is very much moving in, just way more flexibility. I do wonder, however, Roy, if it's like derivatives on derivatives, because how Tom Lee has been explaining this was you can essentially have betting markets for finite events through tokenization for equity. So, will Tesla beat earnings on Q3 2028? Yes, no, what will it be, kind of thing. And it reminds me of that scene in The Big Short where like they're playing at the blackjack table, and then like everybody is like betting, derivatives of their original bet, because we have like you going long or going short a certain stock in the market, and then you have tokenized versions of that stock or fractional shares, let's say, and then you have like events contracts based on something that company does, and it's just dominoes. But we'll have to see largely how it gets implemented and how quickly it advances. That's just my high level concern. Blake asks, what about Rocket Lab? Rocket Lab was up today, I think, right? Wasn't it? Pretty sure.
5.12%.
5%.
So,
Matt Money.
man.
Yeah, he posted on his Instagram. He was flying private, like first class, not private
Nice.
yet, but yeah,
Soon.
soon.
Yeah, 72% year to date. Congrats for longs. Yeah, I'm wondering. I still like this rally has surprised me a little bit just because I thought, if you ask Matt, it's probably he even sees that it's above where it should be at this stage. I think well above, but market will do that. And I'm not saying it to slight people that have made a lot of money. I think that's awesome. But I'm wondering what's going to happen when SpaceX IPOs. I think that we will see some rotation. The nice thing is with this big rally, even if it like dumps, it might dump to $100 a share. Like it was there like May 7th, so you're not erasing much. So that it's a great thing to be a Rocket Lab shareholder. I'm not one, but I wish I was.
Yeah. Historically, it's done very, very well. So, no SoFi buy. Nope. None for me. Yes for Roy.
Yeah.
Are you guys stacking dry powder now?
A good chunk of my portfolio is cash, but a lot of it's allocated in cash secure puts. I have some beyond that. And I like cash as a bit of a hedge and for opportunistic strikes, but I have more than I'd actually want right now. I'm when I get above about 10% cash, that's where I'm like itching to deploy it soon.
Yeah, I mean, I'm in margin, so that should tell you all you need to know. All the cash that I got from. Okay, so when I say margin, because somebody also asked about the margin somewhere down here. Yeah, this person. Oh, sorry, not that question. It was the same person, different question. Yeah. Did you say Tevis is using margin? Yeah. So last week I was actually in margin where I was getting charged interest and I was using money that wasn't my own. When my Amazon got called away, that cleared out my tab essentially. And when I say margin today, I mean commitments from cash secured puts that if I got assigned the shares, it would put me back into margin. Technically, my balance is positive right now on my Wheeling account, but I think I have, let me check for you what I have. I have SoFi cash secured puts for $16 on July 17th. And I have Nebius cash secured puts for 160 at July 17th that I wrote today. So if both of those got hit, I would have a big margin bill, but I don't expect either of those to get hit, quite frankly. So technically not in margin, but it's collateral that I don't have cash on hand right now. So that's what I'm saying when I say I'm in margin. I'm not actually cleared my bill last week.
Do you use portfolio margin or is this just traditional margin?
When I buy on interactive brokers and my money goes negative, I don't know which one that is.
Yeah, that's not portfolio margin. So yeah, TJ was talking about it on Friday, which is why I asked. So I don't. I really don't use margin. Very rarely as a tool, but yeah, I don't want to be in margin. I don't want to stay in margin. It's usually just when I have money coming in, and I'm like, I got to make this buy now. So
yeah, and congrats to everybody that got a membership. I am going to try to do an options video off the back of a question that we got. I'll maybe try to do one tonight or tomorrow. Can't find that question right now, but it'll pop up eventually. It was like, are you going to do an options video? No. Try to do one. Yeah, we don't talk too much about options because it doesn't really get that much attention.
And if people are doing it and they don't understand what they're doing, like that's a way to just blow up your account. So don't do it if you don't understand it.
Yeah. Thoughts on NVIDIA heading to earnings? Roy thinks it's going to go up.
Yeah, 18-minute marker. We start talking about it. I think this time it is different. I'd love to be right again.
Yeah. Kryptonite Good says, isn't air proof that people need to better understand market makers and monthly OPEX states? May OPEX was Friday, and air falls 16% on Monday on Zero News. Market makers ruled the world.
No, I think that this. I mean, there's a little bit of truth to that, but mostly like Air has not traditionally had weekly options, but it's had monthly strikes. Weeklies are new as of like a month or two ago. Not high volume, so this was a monthly expiry, which is why I had covered calls written to that. Just it's better flow. No, look at what's happening in the space. It is, even though it's a lot more than silicon photonics, because it's just one of four different substrates that they can actually test. It's tied in as far as a narrative with what's happening in the space, and all these silicon photonics names that are high beta names are down today, and it's not just because of this. So I would say no, that's not the cause for the dip. Maybe like 5% of it, but nah.
Okay. Tevis Roy, thoughts on Tim Sweeney's recent tweet up on the tech platform? I haven't read this yet. I got tagged into it, and it was like a long Tim Sweeney post, and I think I was just like running around, so I haven't read it yet. Have you had a chance to read this?
Yeah. Tim and I had a long private conversation, and it didn't include. Well, it included a little bit of what he said, but I think the main thing that they're probably asking about is selling data of members. And I think, okay, I'll say this. I loved him. I really respect him, and he has a brilliant mind. But I think he is just absolutely, completely wrong on this. And yes, Tevis, you can absolutely clip that. There's several reasons why. One is it would require rewriting their privacy agreement. That is easier said than done, but it can be done. Second, on an increasing level, people are more and more skeptical on being able to, on companies selling their data. Third, I think Tim said something like it was some huge amount of money, like 15 something billion dollars could be generated from doing this just based on the tech platform itself. With that, SoFi doesn't actually own that data. It is their partners or clients. So, for instance, Chime just offboarded, but when Chime was using it, it's Chime's data or it's Chime's customers' data. So there's several layers to that. And I think that customers, if they're using the tech platform, would be quite upset that their clients' data was being used specifically. And so I don't see that would fly. And then also they're a bank, like ultimately that's a main business for SoFi. And if they did this, even if it was just a tech platform, they're able to rewrite things and navigate all that with the partners. It's not going to be as accretive as what he was intimating, but also it would also cause some, I think, churn as far as customers, because we even saw that little change that SoFi made with SoFi Plus, the way they handled the interest rates. A lot of people were mad, and not, I would say a lot, but some actually carried through with switching their banks. This, I think, would be an even larger concern and would add to the narrative that I think SoFi wants to avoid, that they're getting their money right. How is it getting your money right if you are making your customers the product? I don't think SoFi can do this. I mean, maybe they could. It's going to be a challenge. I don't think that they should. And certainly, like if PayPal, which has some of the largest and richest data source in the world there, is struggling to be able to monetize that, SoFi is just not going to get much out of it. I think it hurts them far more than it helps them, even should they go that route. Plus, Noto, I don't think there's any way that this actually happens. So I think that he is just dead wrong. Respect and love the man, but yeah, this is not right.
Yeah, I got to read this post and maybe react to it in a video of some sorts. Matthew Johnson says, hold up, does Robinhood let you do cash secured puts and write calls against that cash secured puts? So I don't know what Robinhood does or doesn't let you do. In my case, I'm writing covered in both cases. So I either have the cash in the cash secured puts sense, or I have the shares in the covered call sense. He asked this when I was explaining about my my Nebius strangle. So
yeah,
I'm not doing
any platform. I don't know any platform that lets you do that, Matthew Johnson. None that I'm familiar with of the four. So maybe like some that I'm less familiar with, but it's not Robinhood. No, you have to actually own it.
What if Air and Nebius dips were okay? This is the same question.
Yeah, same guy.
Hey Roy, can you talk deeper into why you think selling data isn't a good idea for SoFi? I saw you comment on this post.
Yeah, I think we covered that, but like it goes against their brand. It damages trust with their customers. It's really not that accretive. And if they're just doing it on the tech platform, I think that we see even weaker performance and fewer people onboarding with the tech platform. I mean, like, why would you want to when you're like, oh, these guys are going to sell our customers data? Like if you're T-Mobile, for instance, like, oh, you're going to sell our customers data now, data that you don't even own. That could get them in legal trouble. It's not going to be really that accretive. And it would likely lead to some contracts just saying, okay, we're going to go the route of Chime and get off the tech platform. I think it would kill the tech platform, honestly. The one thing they can do, BP Morgan Chase ended up doing this. JP Morgan Chase. I forget the name of the product, but 2 years ago, 2024, they were looking at the same thing where they have, even more so than SoFi, just a ridiculous amount of data. Like, how do we monetize that? And they've done that basically with platform offers. Like they allow advertisers not to access their data directly. It never leaves the ecosystem, but they know you as a customer, and they're like, okay, we're going to allow ad placement in and on our platform. The data is never leaving our platform. It's similar to what PayPal has done, or at least one aspect for their advertising. And that's maybe something that SoFi can do. I don't know that they should do it. And if you look at, like, I know you don't have access to SoFi, whether it's the app or on the platform itself on desktop, but it's already a little bit of a cluttered interface compared to some other neobanks. I think it would take away from the brand personally. So, if they're going to make, like Tim had said, I don't remember the amount, but if they're going to make $15 billion off of that, I'd be like, okay, go for it, because that would be absolutely ridiculous. But the reality is, it's harder to monetize than I think that Tim is saying there. So,
do they ever share? For us, do they ever share what their average SoFi cost is? Curious when they'll be bag holding. Yeah, sure,
I don't
man.
even know.
I'll share that with you right now. Mine is $8.15. That's in my long-term portfolios. I have a couple of different long-term, but in my Wkly account, it's like $23 or something. So because I was writing pretty aggressively on it. But again, that's all covered by wheeling profits. But in the long-term buy and hold portfolio, it's $8 and what did I say? 15 cents. So hope that helps.
Yeah. Sorry, my phone has this weird screen issue. Let's see. Give me just a second. You can fill in the space here.
Yeah. So I think that's why both Roy and I are pretty comfortable with SoFi being where it is right now, because I mean, it still needs to drop quite a bit for us to be severely impacted. That said, I don't really love the price action that we've been seeing. I don't, if I do sell SoFi, I would definitely sell the wheeling portfolio shares first, because that's the ones that I'm writing most aggressively on. But I'm still sitting on, like, in some portfolios, I'm still sitting on over 100% gains, even where we stand right now.
Yeah. Okay. So I'm in, and this is just my largest of the SoFi positions. I'm not looking at Webull or anything. Looks like $12.56 is my average, which I've been adding, which is why it's there. So yeah.
Look at that transparency, eh? Gotta love it. Matthew Johnson, do you guys ever typically close the covered call at 80% or just let them ride to expiration if you don't want the shares to potentially get called away? Yes, I can. I even sometimes close them at 50%. In the case of, I've done it on air. I've talked about this on the show before. I think it was on Air or on Nebius, some of these companies where I just get lucky and I just write something and the stock goes up maybe 10% or 15% the next day. And as a result, the puts that I sold or the covered calls that I sold, they're like up 30 or 40. Like, I'll close them in 2 days if I think I've captured a good chunk of that capital. And in cases where you're not, like, unless you're absolutely 100,000% certain that you would be happy to let these shares go, I mostly don't let a lot of stuff go to expiration, because you never know, right? One piece of news can take you over I've had positions where I've been 95% of the green, and then something happens, and then all of a sudden I'm at risk. That's unnecessary, right? So yeah, sometimes I'll take profits at 60%, 70%, 80%. It doesn't really matter. This is also why I feel so comfortable with options, because any one day can swing it in your favor, right? Like I wrote covered calls on Nebius last week, and we got the day that we had today, and I'm already up 50% on those covered calls on Nebius, even though they expire in like 3 weeks, right? So I'm like, okay, cool. Like, let me just take the profit on those real quick, because it's been 3 days since I wrote them. 50% in 3 days, it's not worth me holding for 3 weeks of risk for the remaining 50%, unless I'm super comfortable to let all the shares go, which in the case of Nebius, I would probably roll those out.
I rarely end up closing them out, but I will if I think that there's some sort of catalyst that's potential and they're fairly close to in the money. I'll do that just out of prudence for after-hour volatility, because there's a gap in time. It depends usually on the brokerage, not always, where an after-hours low volatility move can mean that you're blown out of the water. And so in that case, I will, but it's like less than 5% of the time.
Yeah. Which is interesting, because like I would say for me, I probably close mine out maybe 90% of the time before they get to expiry. But I also assume I write way more aggressive than what you do. So
yes, you do.
as a BMNR bag holder, I'm going to ask a random question to keep you from going insane. What would your last meal and drink be if you're on death row? Wow. You must be like a really big bag holder. I don't know, man.
I don't mind. I'm in Texas, so that's a caveat. And if I was other places of the country, maybe I wouldn't say this. Fajitas, like really good fajitas, dude. Like with the steak that's actually not just like some sort of weird meat that's way overcooked, but actual steak, juicy chickens, succulent shrimp. Oh man, my mouth is watering. Fresh guacamole. The pico de gallo, the freshly shredded cheese, not the weird stuff with the corn, the fresh made in-house corn tortillas, not corn tortillas, flour, I'm sorry. And when you come to Texas, I'm going to treat you to a place, or I guess you're supposed to treat me. I don't know how that works. I guess I'll go to Toronto first and then you'll come down here. But yeah, that, man, Tex-Mex fajitas, you can't beat it. Especially when it's all made from scratch in-house.
I would probably have, I don't know. Initially I was going to say like, sushi or something. But then as I think about it more deeply, I'd probably have probably something my grandma would make when I was a kid, or something my mom would make when I was a kid. Like a home cooked stew or something, that I had growing up. Can't beat it, man. That's going to die off with that generation. And then you're just never going to have that again. It reminds me of that scene in Breaking Bad where the guy invites Walter to his house and he's just like cooking this meal, and his whole thing is like, the power of a random combination of ingredients to trigger some deep memory or sentiment you've had in your life, that alone those ingredients don't mean anything to you, right? But when you put them in the certain order, anyways. Next question. Speaking of food, chocolate chip mint or Rocky Road ice cream? Fuck mint all the time. Rocky Road is the way to go.
Give me the mint. I don't love either, but it's better than Rocky Road.
Dude, no, what the hell?
You know what's really good though is grasshopper ice cream. It's so good, man. It's cookies and cream, but mint chocolate chip is in it as well, and it's so good. I am a little disappointed that there's no real grasshoppers in it, but it's delicious. HEB, man. Texas food is just so good.
Dude, I thought you said mint, and I thought it couldn't get worse, and you said grasshoppers.
Not real grasshoppers. I would try that, but
okay.
Yeah. No, I'm more of a vanilla guy, honestly. I love a really good vanilla. Yeah.
Pineapple on pizza or not?
No.
Yeah,
I think there's a special place in hell for. No, I'm just kidding. But no, that's gross.
like that's one
If
of
you
the
like
seven
it,
rings.
yeah. If you like it, you do you. But Tevis, are you the same? No pineapple? Yeah.
Yeah, no pineapple. No pineapple. Um, what? Sappy AF, my story. Um,
I like
thanks.
it. Nostalgia, there's something to that. So
Yeah. Is this still a stock show? No,
maybe.
it's cooking with Ron and Travis.
Yeah, I think all the other questions are related to stock. So
Are they?
except for one.
Hi, Tevis, Roy. Are you guys interested in photonics? And Mick got into GLW. What's GLW? Is that Corning?
It's Corning. Yeah.
I'm
Yeah,
starting
they
to read
had a
about
big
this
partnership with NVIDIA. I mean,
NVIDIA
like,
invested in them. It's in the portfolio for NVIDIA. That's how I knew about them.
yeah, I'm invested in photonics through NVIDIA and also through Airtest Systems, being positioned very well for photonics. I'm interested in shorting a photonics play, which is Poet, if it climbs back above 20, which it could. Like, they're very good at promoting their stock. The more I looked into that after a Friday conversation, and I've got a separate video on this, like, I'm not saying other people should do this or not, but like, man, there's something wrong with those guys. There is absolutely something wrong. I have a couple of theories on what it is, but I think most photonics, like, it's an exciting place to be. If somehow all my air gets called away, which I don't have covered calls written on much of it right now, maybe I'll pivot and get into a silicon photonics name. AAOI I really like in the space. I think that they're high quality. And so that might be one that down the road I'll look at getting into, but everything's run so hot, it's hard to say. And then those that people are just starting to get into now that haven't run, like, they're so speculative or weird. It's hard to say on those names. So yeah.
Yeah. Roy just looks like a Texas person. I mean, he is. Matthew says these are Fiesta Friday questions on the food.
I'll talk about fajitas any show. Like, just
You're gonna make me hungry now. And I have to have food as well. So fajitas might be an option. I had sushi once live on the stream, and they won't let me forget it. And that was like 3 years ago. So yeah, that's that. That ended that one. Buy DRAM over MU.
As we looked, Micron is like 6% of that portfolio. Like, if you're bullish on Micron, just invest in Micron. If you're like not sure on the space, if you know that the space will do well, but you're not sure about the individual players, which really it's just a triopoly mostly. Yeah, I don't think it's bad to buy either necessarily, but I'd probably prefer Micron personally as well.
If you're in Austin, Franklin's is great, or Terry Black's. Even I know those. I don't know about Houston.
Yeah, I mean, like, you can any square mile in Houston, there's going to be a ridiculously good barbecue place. There's some that are better than others, but yeah, there's none of that weird like vinegar barbecue stuff. Like, there's a place for that. When I was walking in graduation, my parents treated me to dinner, and they went to a place and they got the ribs, and I was looking at those ribs, and I didn't say that to them because they ordered it, and if they're happy with it, that's great. But I'm like, dude, I can make better ribs in just my oven. And they were the saddest, most pathetic looking ribs ever. I tasted some, I'm like, there's zero flavor. They don't put any, it's like, oh man. Yeah, Texas, dude, like, Tex-Mex food, you got authentic food from all over the world, and Texas barbecue is just, it's legit.
Yeah. Oh God, let me keep bookmarking as people are asking. Do we like ASTS? I mean, yeah, I think space is cool. I think it'll do fine. I think it'll get hyped up by SpaceX IPO. I don't know how it'll trade after we do go public, but TBD.
Yeah, I don't have a strong opinion on it.
I'd watch a day in the life of Roy and Tevis. I'm talking like, we need to start other channels where we just do other stuff, and none of this stock stuff. But
I think a day in life would be more interesting on watching you than me. But yeah,
I mean, I
yeah,
think both would be pretty interesting. It would be like,
I've got work stuff, I've got family stuff, I've got stock stuff, and that's it.
yeah, it'd be definitely variety. Anyone start a position in Celsius yet? Nope.
No,
All right. Are
it's
you
a
trading?
commodity. Yeah.
Are you trading options on iron juicy premiums? Nope. And the reason why is because I don't want to own it if I get hit on it. So no.
Yeah, like if Iron was doing its thing where it was underperforming dramatically, maybe there's a point where I do that. But yeah, I'd prefer to own Nebius far and above, CoreWeave as well. Iron, not super excited. I think it's fine, but yeah, not here.
A little sad I don't see him Mint with y'all anymore. I mean, he's always welcome. Friend of the channel. We met him down in New York. I mean, I met him down in New York. But yeah, always welcome. If Matt or Tanner or TJ, in the case of Saturday, whoever these guys show up on in the comments, we'll throw them a link anytime. Here it is. Elizabeth was the one that asked, why don't you guys do an options video? Yeah, so I'll probably do something like this, members only, at some point this week. Hopefully I can record something tonight. Yeah, we'll see. Matthew, I can. Do you think memory is going to do well for how long? The Seagate CEO seems a little bearish, not opening a new factory.
Yeah, let me pull that up here because I think this kind of shows you what others are thinking. This is just Micron. You can do this across the board for others as well. But you can see this using Fiscal AI, the revenue consensus. And this is one where there's a lot of analysts that have these expectations. You can see the drop off is expected in 2028. There are some that go beyond that, but a lot of analysts haven't, which is why it doesn't show beyond that number. And Micron in the past has been somewhat cyclical. Memory has. I don't know that this time is really different. It does take a few years to build a factory. And so I don't know the Seagate CEO comments. I've not heard those. But when you're building a factory, it's not just like, hey, we'll build a factory and we'll have it ready to go at full production in 6 months. This is like 3 years down the road. And so if you're looking at that here, there's this expected drop off in the space. There's a few reasons that people expect that. But I think even if you're bullish on the space, you're not seeing gains like this between 2025 and 2026 every single year as durable. You might see it continue to go up a little bit more slowly. We'll have to see.
Yeah.
So I do think you have at least till 2028, but the market is forward looking. And if there is some deceleration in the space, you might see the names drop a lot more than that. You would think by fundamentals is warranted. Now, I think that's also one of the reasons why names like Micron didn't just absolutely explode earlier, is because people were too tied into this idea of cyclicality. And it's still cyclical, but maybe not. I mean, not as much as in the past, I don't think.
Yeah. Matt Flo says, Lisa asked about, okay, there's 30 questions that are still bookmarked. So I'm sure it's in the pile somewhere. We're gonna bring it up. Don't you worry. There's a lot still to come, even though we only have 30 minutes of the show left. Are you cash secured putsing Micron? No, I did not. It was an option that I was thinking about, but I haven't written on it. I'll let you guys know if that changes. Do you guys think SpaceX pumps space stocks or sells the news? Good question.
I think when it IPOs, it will not pump them. I think it'll do the opposite. I think that things are pumping in part now because of SpaceX. So I think it's buy the rumor, sell the news.
Yeah. Is BMNR a good buy here? Asking for all my DGen buddies.
I think it's okay. The reality is that we're still in crypto winter, and I think that Q4 is when we see ourselves emerge from that. It doesn't mean it's going to explode to Ethereum all-time high immediately. It takes time. Look at the previous cycle. In 2023, we had that transition as well. And so I'm not in a hurry to add more personally. I will late this summer, so June, July, well, probably more July is when I'll start adding into crypto names. BMNR is one of those names that I do want to own more in. Yeah. So I don't think it's bad, but I don't think it's necessarily like good. Just better opportunities right now. But hey, if I'm wrong, if we're out of crypto winter this next month when Clarity Act passes, and it just starts flying, that'll look silly in hindsight. But that's why I have some BMNR. So if you don't own any, yeah, maybe just start DCAing into it until you get the position that you're comfortable with. You won't have the best average, but you'll have a good chunk for that next run up.
Yeah. Is Nebius a piggy bank stock for you? No, absolutely not, Elizabeth. Nebius is way too volatile to ever be a piggy bank stock for me. What would be a good strike for writing puts on? The price at which you're happy to own the shares.
That's the best way to look at it. Don't look at what the money that you make as the main indicator. That's a mistake. But instead, hey, I'd love to own these shares anyway at this price. And then you get some money for loving that, whether they feel or not.
Yeah. You can go ahead and clip that if you want. It's funny, Michelle, who honestly never joins these streams anymore. I'm hurt. She has a whole folder of just Tevis expressions for stuff that she's clipped, and it's hilarious. She'll throw me as a Giphy or a meme back at me when we're chatting, and it's just me expressing or being expressive in my face. And yeah, it's funny. There's we have hundreds and hundreds, if not thousands of hours, honestly, at this point online. And there's a whole bunch of stuff that I'll say in the moment that I forgot about and just lives on the internet forever. So that's your scary thought for the day. Yeah, she did. She totally abandoned us. But actually, I'm not even going to get into that. I was going to say I got really into Instagram reels of roofing videos, and I keep sending them to Michelle, so I think she's annoyed with me at this point. I send her 20. Thank you, Nepal, for the $10. Appreciate that.
Yeah, thanks, man. That's really nice.
Do you think SAS has bottomed?
It's interesting. Let me pull up IGV. I didn't see how it closed at the end. We'll spend just a few more seconds on this. Then, it's been up decently. It's up 3.6%. Of course, it climbed today as well. I don't know that it's bottomed. Maybe so. It's definitely up from its April 10th bottom. You saw some interesting things. I don't know if you caught this, but when the overnight market opened up on Sunday, 8 o'clock Eastern time, ServiceNow just exploded, and there was no news. And my initial thought was okay, could just be traders, speculators, it's low volatility, don't read too much into it. Well, it's up almost 10% today, and there's a lot of names in this space that are up a lot more than that as well. So definitely some sector rotation away from the semis. I don't think the narrative is fully wrong, but usually what happens is the market shoots first and asks questions later. And now it's beginning, there's been enough people that have weighed into this that it's beginning to ask questions and say, okay, well, maybe not all software is going to zero. Maybe some is actually stronger from this. What is actually going to zero? And so we might be at the point now where not as far as all SaaS is bottomed, but some names in SaaS, maybe like ServiceNow, has said, you know what, this selling is way overdone. It's gotten to the point beyond silly. And so we see at least some stabilization in those names. If I don't know that we'll get a face ripper rally, but yeah.
Yeah, it might be interesting because it might be time for us to start cherry picking some SaaS names that we want to get into, because if we do see a rotation, then the capital is going to flow back into those names. And that was my first sort of gut reaction on seeing ServiceNow. I was like, oh, the AI trade is down and SaaS is up. Like maybe that's there's something there.
Yeah. Yeah, there's been some interesting comments on this too. Like I'm not into HubSpot, HUBS. The CEO said some very interesting comments. Like look on X. I think it was his post directly. If not, it was somebody that recirculated it. But yeah, we'll have to see. But I think the market might be more nuanced as it approaches SaaS at the very least. So if there's some names that you're interested in, it might be a good time to start DCAing.
Yeah.
Are you going to buy Wix, Tevis?
And subscribe if you haven't already. Appreciate you being here. Thank you, two brothers, for the $10. Really appreciate you. Am I going to buy Wix? Yes, possibly. I mean, add it to the list of things that I need to buy. I keep saying these things, man, but I keep rotating on like the same handful of names that I need to get out of that. Like I feel like I've worked so hard over the course of years, Roy, to actually reduce my portfolio diversification and just concentrate further. And now that I'm finally there, there's all these other compelling options for me to buy. And I'm just like, oh man, like I want to do it. But then I know that if I do it, it's going to come with like me having to track a whole other company and following their earnings and, what are their catalysts and this and that. And I'm just like, I know what I know. And, it's been working fine with Nebius sort of carrying some of the other names on its shoulders this year. And next year it might be different. There might be SoFi carrying Nebius on its shoulders. Who knows? But the point is like, it doesn't make me very enthusiastic to buy new stuff. But at the same time, like, it's always fun to buy new stuff. You're like, oh, I'm in a new name now. Like, it's a whole new I don't know. I'm rambling. Yeah. But yes. When will we have a new stock draft? Good question. Good question. Yeah. So funny enough, our last stock draft was in June 24th. So we're actually coming up close to the year mark on that.
Yeah, I don't think I even want to look at
I'm looking at it right now for you, and I don't think you want to look at it.
Yeah. Yeah, even one of those names that I was bullish on, but I would never want to own, which is Meta. Like that's also done poorly. Like I think if you would be hard pressed to pick a worse. And I'm not like, it's hard because I'm not that broad. I'm very narrow with the stocks that I invest in. And when you have that kind of a draft and, there's like 120 names that go, there's a lot of names where I'm like, I'm really bullish and I'd love to own this, but somebody else grabbed it. You can't, and you're stuck for a year. So,
yeah. But eventually we'll do a new stock grab. Thoughts on grab? No, we've talked about this before. I don't think either of us have any horse in that race.
Yeah. I'm rooting for shareholders, but I think it's an okay opportunity. I don't think it's a great one. I don't think it ever has been. I'm not saying that based on price action. You can go back to January of 2025, and I think I was commenting on some of that. I'm like, I think it's an opportunity cost at best.
Is the data center play still strong in 27 from your perspective?
Absolutely.
Yeah. Demand is resilient, and I think the use cases are growing, not shrinking. Do you like ONDS?
Ondas. Yeah, I think it's interesting. I would have to do a lot more research because it's not a simple company or thesis or stock. I've done some, and I'm more familiar with it just because of its close partnership with Palantir. And I'm somewhat interested in drones, but like it to own, I'm not sure. I would have to do more due diligence, but like the company and what they're doing, absolutely.
What's the last question in the queue? I mean, technically, I guess this one, but yeah, there's like 22 more bookmarked. I'm going to bookmark the take two question, and I'm not going to bookmark anymore because we only have like 16 minutes left. And I am hangry, as you could probably tell. Matthew Johnson, again, this is the reason why you guys can't get your questions in, because of this guy. Okay? Just kidding. We love you, Matthew. Is there ever a possibility that Nebius doesn't sell out of its ClickHouse at IPO? Could they hold on to it for longer? I mean, they could. I think the arithmetic there is whenever they deem that they can compound that money faster in their own investing in the core business versus keeping it in ClickHouse, I think that's when they're going to make that trade-off. I think they're going to be fine for 26. I mean, yes, they do have to raise more CapEx, but I don't think they're going to sell ClickHouse this year. I will predict that they will sell ClickHouse in 2027. That's like a spoiler for my predictions video for 2027, as I think they're going to sell at least a part of their ClickHouse stake in 27. Because I would imagine their CapEx spend for 27 is going to be higher than 25 billion, right? It's going to be increasing in CapEx spend. And at that point, like, it just makes sense because ClickHouse is going to raise more money towards the end of this year. And once they do, Nebius' stake is going to be like maybe 7 billion, 8 billion, even as high as 10 billion by next year. So it's an easy way to fund that. Why are you not interested in Celsius? You and Roy. Well, not Roy. He adds to the competition. I was in Celsius just for a trade. I did very well in that trade, and then I got out. I bought it between 60 and I sold it at like 90, and then it fell to like 30 or 20. And I think Roy has a good point on like them being commoditized. Like, whenever I go to Costco, like sometimes I'll buy Celsius, sometimes I'll buy like Alani Nu, which is now owned by Celsius again. Like sometimes I'll buy Monster. So I don't really have any allegiances there, really. But yeah.
And yeah, commodity businesses can be incredibly valuable. Like eventually Nebius is going to have that. But when you have a commodity that has resilient demand, growing TAM as well, growing number of applications and use cases, and then you have some level of differentiation, which is for them the neocloud that they're building. That's a commodity I don't mind being in. Commodity, but you need to have the scale. You need to have the differentiation. I don't really see that with Celsius personally. I don't think that they're a dud, but I just think there's way better opportunities.
Mm-hmm. Corey versus Nebius. If you got to personally talk to any of the CEOs of any companies you're invested in, who would it be and why?
I guess I could say hi to Vlad again, but no, just name dropping. I had to do it. So of those that I have not talked to, it'd probably be Alex Karp. That'd be a really fascinating conversation. But like one that I've tried to reach out to, and they're small enough that they actually don't have their own IR team, that they outsource that, and small companies tend to do that, is Airtest Systems, Gain Erickson. He's been in the space a long time, and what's happening in that space is just so fascinating. So I'd love to pick his brain on that, and also specifically on air. And there are maybe a couple of CEOs that I am talking to over the next couple of months. So stay tuned.
Oh, there you go. That's juicy. I think talking with Arkady would be nice. I'd also like to talk to Zuckerberg. I think that would be an interesting conversation just to see how he thinks about, like, he's very much like a product guy in terms of like how he thinks of things. I mean, I know he's like an engineer, but he's been with Facebook or Meta like since day one, right? And so he's seen all the evolutions, and I think that could be a really interesting conversation to dive into. Yeah. Jassy, I don't know
Jensen, but I'd feel too dumb to talk to Jensen. So
Jensen's like the most down to earth guy, man. Like, just take him for like noodles and sake and just shoot the shit, apparently, from the paparazzi photos. Yeah, I think those would be like the most interesting ones for me personally. I'm just looking. Yeah. I mean, I guess Elon, but yeah.
You don't have Tesla shares. You can't anymore.
It's on my watch list, all right, Roy?
All right.
I'll buy one share just to have the chat.
You hear that, Elon? Give
Yeah.
this man an interview and face to face only, and he'll buy 1 share of Tesla.
Oh, face to face only, and I'll buy 1 share of Tesla. That's a good deal. You get
Yeah.
1 share of Tesla. I get 1 hour of your time. So you should clip that and send it to Elon. Remember when I clipped you with your brother, and I said, "Hey, you should talk to this guy," and it got a whole bunch of buzz, and then PayPal did nothing, and then he got fired. Wasn't that fun?
Yes. Not so fun.
How old are you guys? I'm 41. Just trying to see where you are compared to me on the timeline.
Yeah, 45.
Yeah, I'm 31. Do you guys own the crypto miners? No, I have before. I don't right now. Do you hate the sector? No. I think most of them are pivoting to AI anyways.
Yeah. No, I in 2023, up to 2023, I owned some and just used some as swing trades into the crypto rally that happened. And I got out. Looking at those businesses at the time, I just said, hey, these are not like, I mean, they are real businesses, but they're not like durable businesses unless they pivot. And if you're pivoting so far away from what your core business is, that's a hard pivot. Like even Iron, they're doing just fine, but it's not easy. And I'd rather be in the space that I want to be in than hope that the pivot works out well.
Yeah, thank you, Matt. 32 months I've known this man, and probably longer, honestly. But he's been a member for 32 months. I knew him when he was broke.
Before he was the White House quant.
Yeah. All right. Let's see. What percent do you keep in cash? People seem to be underestimating war can potentially escalate again.
Yeah, it's normally not a high percent for me. Entering earnings, I like to have a good chunk of cash, and I have a lot more cash than I'd like to have right now. I have more than 10% cash, just because a lot of covered calls and taking some profits, and in some cases some small losses.
Yeah, I mean, at the beginning of this year, I was almost 20% cash because I was using it as collateral for wheeling. So that is also an extra reason why I would keep the cash around. Two Brothers says, BMNR SoFi hood suppressed until crypto winter is over. Yes.
Maybe not SoFi, but hood and BMNR, yeah.
To have a soft topic, but thoughts as a PM on how AI native finance products will be built. Look, I think there is a moat with regards to finance from a regulatory perspective. Like you can't get a banking license, or you can't get some of these regulatory permissions as easily. However, the data is pretty publicly accessible because markets are public. So that will level out the playing field. Like I can whip up a vibe coded website and I can have the exact same data accuracy as what Fiscal AI does, or what any one of these, what Perplexity Finance does, because the data is the same source. Now, what I will say is, reading your question, the first thing that came to mind was that Naval quote where he said, like, hey, with AI, software is going to get really, really, really good right before it gets obsolete. And here he, like, how I interpreted it was that the experience of me going to software as a service or a site to get my information is going to improve, because so many are going to, vibe code their own solutions, have smaller teams. But very quickly after that, you're going to get into this agentic based proactive model where I can just ask, a voice assistant, or I can say, hey, like, I want to invest in Micron. What do you think? And I can get a full curated response that's better than the other side of me, going onto a software product and querying it. And this is also something, by the way, that Anthony Noron's talked about as well with regards to Cash Coach and SoFi's AI products as well, is this whole idea of moving from a reactive model to a proactive query model, where you're now the AI agent knows you, it's personalized and tailored to your use case, and it's making decisions on behalf of you, and that's gonna only be amplified with agentic services going live. So that's how I'm thinking about AI native finance products right now. It's really a transitionary period, I would say, and we're going to see how many SaaS companies survive and to what degree, and how many of them adapt. But ultimately, there is going to be a higher and higher take rate for these agentic services, and that's going to be a really interesting time to be alive, because it's a completely new paradigm, a new way of digesting information, because it's all curated for you. Jay says, I'm also buying ONDS. Love the company. What are our thoughts?
Yeah,
I would say Roy shared
yeah,
something.
thanks for following and popping in. Yeah, I like the company. Like the one thing I will say is like where I do most of the work is I see the moat, I see the opportunity there. I'm not sure on leadership and I have some questions. And so, maybe if you haven't already center your research there, at least for me, leadership is always a big part of the thesis. And thank you, Matt Money. Love you, man. By the way, like going back to the AI and finance question, this right here is just it's a 7.5 minute video. It's Figure CEO Michael Tannenbaum. There's some really interesting responses in here. I do need to do a video at some point, talking about that. But that's worth 7 minutes of your time.
That's interesting. Any perspective on quantum computing? Been considering going long on QUBT. I have zero thoughts.
Yeah, like the thing with me is like it seems like it's a solution that's looking for a problem at this point. And in maybe like 5 or 10 years down the road, that's no longer the case. And I could be wrong on that, but I'm seeing others that are credible in the space that kind of think that as well. There are companies like obviously Google is working towards that direction as well as a lot of smaller startups. But if I was just betting on quantum computing, I would rather just own Google and be like, hey, I've got a great business anyway, and I get a free call option if quantum ends up being a thing. Google's positioned well there, so why not? Qubit, like with little speculative names like that, they can be very volatile, but sizing is really important. And so, like maybe you have a small portfolio and you just want to go all in, and you do you. But the thing is, with these little high flyer, high risk, high reward stocks, you don't need a lot of exposure to meaningfully alter your portfolio to the upside or downside. So size accordingly. Make sure you're comfortable with your holding. And the way that you know that you're comfortable is, if there's a 25% drop in the name in one day, or you're like, it's fine. You have the right size then, or maybe you have too little. If you're like, dude, I'm going to lose all my money, I need to get out, you got way too much.
Yeah. That's good.
I like that, Thomas. I'm going to have to borrow that.
Predictions for NVIDIA post earnings, 10% up or down. I think Roy says up. I'll go with the under. I think NVIDIA has a bad habit of triple beating and crushing all expectations that people are like, oh my God, this is the best company ever made, and the stock being red the next day.
Boo this man.
We'll see. We'll see what happens. Do you both own space stocks? Rocket Lab has grown to 70% of my portfolio. No.
Congrats.
And how did we both miss Rocket Lab is because neither of us listened to Matt Money.
Well, that's actually not quite true. I'll show you on the chart why I didn't own and what I learned from this. It's actually altered the way I invest. So I think it was right around here that Matt Money made a post. This is August 2024, where he said, hey, now is the time, if you're interested in Rocket Lab, to really consider getting in. And I responded, I just said, okay, you talked about it a long time. I started researching and it ran all the way up to like $7 or $8. And I'm like, well, it'll probably pull back to 7. Let me get in then. And we're up 1,615% since, or no, 2,600% since then. My strategy now is the Drunken Miller strategy: invest, then investigate. And the problem is, it took me like 2 or 3 weeks to just like really break down what's happening in the space, looking at leadership, looking at all aspects of the business. It's like, I see it, the thesis, it makes sense. Let me wait for a pullback that never freaking arrived. And so I missed out on life-changing gains because I didn't do this. Now, in hindsight, what I would have done is, maybe put a few $1,000 in there. Not anything that would kill me if it went down to, like 30% or something like that. It's like no big deal. My portfolio was a lot smaller back then, so that would probably been around about the right size. That'd be worth meaningful amount more. And that's what I do now with names. Like going back to last summer, Air Test Systems, when I was first interested in it, did a little bit of research, and I'm like, there's something here. I invested at like $12 a share or something. And then I added a lot more investigation, and I added to that, the more compelling it was found. So that's actually not the reason. That is a hilarious response, though, Matt.
Cut so deep. Cut so freaking deep. Roy, does Texas have hybrid tortillas? In San Diego, we have this place that has hybrid tortillas between corn and flour. It tastes like corn and texture like flour.
I've not been to a place that has that, like as a restaurant, but like HEB has those. I think they call them Mixitas or something like that, and they're delicious.
Any bullishness on PayPal, speaking of?
No. The CEO's best plan is no plan at all, really, just to pivot away from what Alex built.
Did the increase in service now increase because of all the 13F buys? I mean, we did get some 13F buys on service now.
Yeah, I wouldn't think so. I mean, we've seen, like, for instance, massive insider buys and buybacks. You would think that would get more attention for the stock. I think it's just, again, things trade on a narrative, and people realize, like, hey, it's overdone. It might be traders. We'll have to see. But yeah, I maybe a factor, but not a strong one.
Yep. Should Microsoft get a nice bump this week with Altman OpenAI getting the innocent verdict in Elon's lawsuit? Did they get a bump today? I don't think so. I mean, I guess they're flat. They're plus 0.3%.
Big money, yeah.
Rolling in it, Microsoft investors.
Yeah, I doubt that that's going to be much of a catalyst either way for Microsoft. So,
yeah, we're also Tevis moving a lot. He's definitely hungry. Yes, I am. Hangry is the correct term, and we're also over 2 hours for the stream, and that's like my mental cutoff point. Microsoft and Oracle, what are 20% of IGV? Are what?
No, they're not that high. At one time, Palantir was actually the highest, but I'll just throw this up real quick so we can all take a look. And yeah, Oracle's 10%, Microsoft is 8%, so it's quite a bit smaller than
that's
that.
Pretty high, yeah.
Yeah, Palantir 7.
Okay, next question. Take-Two. I mean, yeah, GTA 6 is going to come out. Do we like Take-Two? I think it's priced in. Other than that, I think they're going to print money if the game actually comes out this year.
Yeah.
Why did you go for a PhD so late in life?
Yeah, I ended up starting it actually in October 2019. So, it took me a long time to go through it because, I work for a living. I've got a family to support, and it was, I wouldn't say a side project. It was a little more than that, but it was like if I went full time, it would have been about a 3-year program. And it's something I didn't know if I would necessarily wanted to do, but this program was one that just intersected really well. It was while I was working at Liberty University, and I'm like, you know what? Why don't I go for this? And it made a lot of sense. If you're an employee there, I don't know if I'm allowed to talk about it too much, but there are some benefits to furthering your education when you're employed at a university. Probably most universities are like that. And so it's like, hey, right time, right season in life. My kids are no longer like little kids at this point. And of course, then COVID hit, so it like really made a lot of sense. And for me, it was not really for career aspirations. I have my dream job, and it is in this field, but like it's not necessarily like people are like, oh, you have to have a PhD, or I suddenly make a lot higher salary. It's not even about that. and so I do what I do better qualitatively, and I'm a lot more effective as a result. But yeah, I'm just slow. Like I've all the way through. Like I got married at 21, and
All right,
ended
don't
up
brag about it.
well. So like I got married at 21 because my wife was a semester earlier than I was in college. She really wanted to get married, and she didn't want to wait. And I'm like, all right, cool. I'll just go back to college. I got 5 classes left, and that ended up. We were blessed with a honeymoon baby. So 9 months later, we were having a baby. And I was like, I need to get a full time job. I don't need to go back to college. And so as a result, those 5 classes took like another year and a half to do. And going to my master's program, which would have been 3 years, it's kind of like that. You know, when you have little kids, you need to provide for your family and everything. That's on the side to your main career. So it just, yeah, the time's going to pass anyway. The one thing I'll say too is PhD, like the average age of PhD earners depends on the field that they're in. The field that I'm in, I would say that I'm just about average at 45 for those earning a PhD. And those in my career tend to be not like be eager for retirement at like 35, 45, 55. Like there's a lot of people in my career that continue to work into their 70s and do meaningful work. So, yeah.
Yeah, I mean, JJ Forever said it. Definitely not late. I think Gary Vee would get really upset at that particular comment. Got a
Yeah.
long life ahead. Lifespans are getting longer, and Roy is just halfway through, or even less.
And I will add like one thing, like part of the thought of getting this PhD is like it unlocks some doors that maybe I couldn't cross. And one of those is teaching. Like when I'm older and wiser and grayer, there is a point where, you know, would I be interested in actually conferring my knowledge? And I've done a little bit of teaching, but like not like as a full-time regular teacher. I appreciate that. That's really nice, Matt. And that's one of the doors that this opens. There's others as well. And it's just, bottom line is I did it for me. I just wanted to. It was one of those things that I'm like, why don't I do this? It's a compelling, I learned a lot from it. It adds to my career. I enjoyed the journey mostly. I'm really glad that I'm done though. Really glad. And I will never read again. Just kidding.
I think that's a perfect place to end it.
Matthew did ask one last question, and I think to honor him, yeah, somebody gave me this. There was a little celebration locally here with some friends and family afterwards, and somebody gave me a Texas Rangers baseball, and I like the Rangers. I like baseball. And it's sitting there for now. They're a terrible team. I like underdogs, so yeah. Very poor taste in professional teams. I will say that.
Yeah. Thank you, everybody, so much for watching and supporting the channels. If you are new, welcome. Subscribe if you like this type of content. We do it weekly on Mondays and on Fridays. And congrats to the people who got a membership today. And we will see you all on Friday. Thanks again. Goodbye.